Hey everyone, welcome back to ASX Market Watch and chart analysis around the world on the world indices. Yes, we look at the entire world from a chartist point of view, all around America, Asia, Europe, down under Australia. I'll get straight into it, guys, because there's a lot to cover as we look at all these charts, starting with down under, the home country, or the country that I trade personally. If you can't tell by the accent, this is where we start, All Ordinaries Australia. But basically the reason we do this is because 3 out of 4 stocks may follow the overall market, and if we know which way the overall market is heading, then we can know which way 3 out of 4 stocks might be heading as well. Really simple. Last week, guys, just really quickly, I said that if we close below this little trough here, that would be a short-term exit signal. Yes, that has happened, and yes, the market has continued down since then. So, yep, not rocket science. Basically, that's exactly what happened. As you'll probably look at, if you look at the previous market watches, we called a really short-term entry signal way back in March 2011, about a month and a half ago. The reasons are in that video. You can check it out for yourself. It's not rocket science what we did, and then the market found resistance at the 5,000 level. Now, 1, 2, 3, 4 times it's bounced off that 5,000 level. What is that 5,000 level? It is the Gann's 50% retracement of the entire bear market. So that is the strongest retracement level. It's also a psychological level, a round number. So that tends to be a psychological number for traders and investors. And basically that's exactly what's happened as well. So we found massive resistance there. Last point of call as well, guys, is a little market truism that tends to float around this time of year. And that is sell in May and go away. If you look at the May months, you'll find that between May and May to June tends to, I think it's May to June or May to July, tends to decline in the markets. There's something to be mindful of, especially since we've just had this trend change. Guys, what we're looking for in the All Ordinaries is a place where we can get an entry signal where there's not too much resistance around. Guys, Dow Jones in America, the people in America are just cheering. They are just loving the stock market at the moment. Got an entry signal at 10,800 approximately. Since then, it's gone to approximately 12,500. So really about an 18% move there. And if you can get a good return on your portfolio with a 7% move in the markets, imagine what you can do with a 20% move in the markets. Let's just say there are a lot of people in America who are having happy days at the moment. What we're looking for in the meantime, if for a reversal, we're looking for a little zigzag pattern down. It will find support at the trend line as well, guys. That's at 12,400, and it's also at the previous high. If I could get my tool to work, there it is. That's the previous high. And what happens when resistance or the previous high is crossed? It tends to become support. Exactly. So again, not rocket science, guys. Very simple stuff. Yeah, that's what you'd be looking for an exit signal, though. It would have to cross all of that stuff, and that's a lot of stuff to cross. But hey, if it does happen, then that's your exit signal. Until then, the market remains in an uptrend. Quickly, the Europe region. Yes, FTSE. This is the FTSE. We've been calling if the market, basically, this is our trigger. If it crosses above 6,100, that would be our new buy signal because there'd be no more resistance. But look how much resistance there is here. 1, 2, 3, 4, 5, 6, 7. 7 times it's just bounced off this level. It cannot cross it. If it did cross it, it would be a great bullish sign, but we haven't had that yet. It's starting to fall away again. Guys, what you'll find is it will find support at around 5,800 at the very least, if it hasn't found support already. As you can see, it's in this little range right here between 5,850 and 6,100. So that's our little range at the moment. As you can see, bounced up and down, up and down, up and down, up and down. Really over the last sort of 5 months, which is massive. I mean, such a small range. If it breaks out either way, if it breaks out to the upside, good, happy days, gains to be made. If it breaks down to the downside, I would say below 5,800, then that would be something to be very cautious of on the FTSE at the moment. But until then, we've still got our range-bound markets sideways. Great for writing options, though. Any option writing people in the room, you could obviously write your options above or below those support and resistance levels if you were that way inclined. Now, really quickly, the Nikkei, not rocket science on the Nikkei, still remains in its short-term uptrend. We called our short-term uptrend way back on this single bar. high start and then went down throughout the day and then a high close, that signals that buyers came back into the market at that level. As you can see, these 2 days previously were very bearish because it was pushed down throughout the day. If you can see that, there it is just there. So again, really simple stuff. This was the day that changed the markets for the Nikkei. Since then, we've had a decent enough bull run. What we're looking for, if I was just to make that decent, there we go. We've had little zigzag patterns up and since then as well. So again, that's more bullish action on the Nikkei. If it were to break down, we would expect to close below 9,500. That would be your exit signal. Until then, it remains in an uptrend, guys. And you know what to be doing when it's in an uptrend. Ideally, you want to be getting in as soon as the uptrend starts. So, yeah, maybe the ship has sailed on the Nikkei at the moment, especially because there's resistance coming up here at 10,700, if not before. Guys, until then, Shanghai Composite. This is one that, again, this is just one that we sort of smashed the last couple of months. Absolutely hammered the Shanghai. We've nailed it. Short-term entry signal right here. Again, check out the previous ASX market watches or charting trend signals around the world because we did nail that one. And again, we did say that the resistance would be at 3,100. It didn't quite reach there, but that is what you'd expect with your downtrend lines. It's basically a lot of people sell before it gets there, and that's what sort of starts the market breaking down basically, but that's where the resistance was, and that's where the resistance was met. As you can see, it's just a simple trend line, very simple stuff. In the meantime, guys, we've got our shorter to medium term uptrend line. That is exactly where the market is finding support right at the moment at 2,820. It's been in this sideways movement for about 2 years now. 2 years, guys. That's a massive sideways movement. It does happen, and again, really, you just want it to break out one way or another. When it does, you know which way the trend is likely to continue. Again, not rocket science. What have we got left? We have got left the Hang Seng. I think this is second last one, and then the Bombay Stock Exchange. Guys, this closed above the trend line, signaling a trend change. Was it supported? No, because there was no higher trough and higher peak, so it could not get back above this level. Instead, it started to break down, and it's breaking back down into this range. So again, we've got more range markets, range bound markets, I should say. Here we go, around about 2,220. 22,222. Basically, that's what we're looking for. That's the support level, and the resistance level is 24,500 approximately. Until then, guys, one of your options may be, if the market is looking strong at the bottom level, then you could buy at that level and you could sell at the resistance level up there at the top. But that's just one method of trading. People will call that channel trading. It's not I prefer to wait for a solid trend to emerge. These are very hard to trade. Again, unless you're writing options, which can be a decent way to do it in this range-bound market. Last but not least is the BSE 30, the Bombay Stock Exchange. Now, again, this is another one that we've kind of nailed over the last couple of months. We had a short-term entry signal. Actually, it was a medium-term entry signal. We got a short-term move, so it did continue upwards. But the thing is, we also called at the same time that there would be resistance around 19,800. That is exactly what happened, guys. So again, that's exactly what happened. What you will find now is, see this uptrend line, long-term uptrend line, very long. What we're expecting is that the market finds support at this level, which it currently is, guys. It currently is finding support at that level. If it breaks down below 18,175, this would be our little sort of zigzag pattern down. And again, it's not too hard to check it out. There we go. If it does break below that level, then that would be a bearish sign. That would be your short-term sell signal, basically. But again, you might want to wait for the market to break out of this sort of range-bound direction. If it breaks out to the upside, bullish. If it breaks it out to the downside, it's bearish. Obviously, again, not rocket science. Very simple stuff. And that, my friends, is the world from a chartist point of view. I hope that has helped in some small way. Guys, happy trading until next week. I will see you then. Bye for now.